Morning, welcome to Freeworld News, and so we're just going to get straight on it. And so, first of all, the currency is still volatile.
Yeah, we're getting through huge amounts of volatility, really. Last week, the euro was looking, had a quite weak tone to it as we ran out and approached the non-farms payroll figure, which came out on Friday lunchtime. When it came out, it was actually a very strong figure, but it didn't see, the increase in number of jobs was, wasn't matched with increase in the average wage. And so people are thinking that there might be a lot of temporary labor being taken on, etc. And these may be, in some sense, not real jobs. In any case, the euro went well above 110, which was quite a rise. So it's a paradoxical kind of movement there. And this week, we're looking at an ECB meeting on Thursday, with before that a Euro GDP figure tomorrow, which is Tuesday. So attention is pretty much focused on the ECB rate decision. Now, what we're expecting is what's being forecast is that the deposit rate, which is minus 0.3 at the moment, might increase to minus 0.4. So that's an aggregate of the forecast, right? So we're sort of plowing on with this negative interest rate strategy. And the idea here is that the bank, of course, buys assets, and it's in fact a negative interest rate means a weaker currency, which is so in an ideal world, or maybe the mind of the ECB, we have apply against deflation, everybody's bogeyman, and we also start buying the assets of companies, so the share market starts going up.
Yeah, sure. There's a quote here from the Bank for International Settlements.
Yeah, and the Times today.
Known as the central bank, so just from the Times newspaper this morning, saying we may not be seeing isolated bolts from the blue, but the signs of a gathering storm that's been building for a long time. That was Claudio Boria, chief of the Swiss-based institution, talking about this, the fact that the global economy, according to him, is heading for a storm as the mistrust of banks are increasing.
Yeah, there's a gradual fear that this business of the negative interest rates charging people to hold deposits, the banks. The idea here is that you try and force the banks to lend money to businesses. There's a gradual sort of fear coming out that this may not be the best thing to do. Businesses are not keen to borrow money because of the huge amount of uncertainty, and the uncertainty is coming not only from deflation, i.e. a slowing down of the economy, maybe a shrinking of the economy, but also basic stuff like, well, the secondary results of that, which is falling oil price. And so we're looking at maybe a deflationary spiral where things get cheaper every day. It doesn't make sense to invest, and yet you're being charged money to warehouse your deposits. We're getting into kind of uncharted territory here, but having said that, this is exactly what Japan did, and now seems to be getting some growth in its economy, but after many, many years of pretty terrifying work situations. I mean, what happens in deflation is that people buy less and less. That means there's less jobs, and things also get cheaper, so you don't feel like going and buying a house or a car or something, because in 2 months' time that same object may be much cheaper. At its peak in Japan, people were selling fridges with safes inside them. People started buying gold. Now we're out of that, and of course the advantage of the negative interest rate is that your currency becomes weaker, which means that the global marketplace for goods and services, I guess, um, becomes more and more competitive as each country, exporting country, drops its interest rate. So for Germany, of course, till really quite recently was the world's largest exporter, is working with a cheap euro. It's quite good news to have a weak currency. Maybe not so good for Britain, which is of course reeling under the uncertainty caused by Brexit.
And there is a little thing about Britain here at the bottom with regard to the manufacturing sector, saying Britain, which is expanding faster than most Western powers, is slowing too. And the Bank of England has cut its forecast for UK growth this year from 2.5% to 2.2%, so 2.3% decrease. And also it points out to the British manufacturing sector being on a 6-year low, according to the manufacturers body EEF.
Well, that's right. This is basic political uncertainty. This is like if your your trade is based perhaps on sales to Europe. You've got till June the 23rd to wait and kick your heels to think about, what the situation is going to be like after this referendum. The good news there, well, in my view, good news is that over the weekend we also saw some YouGov polls which suggest that the Remain side of the thing has gained quite a lot of ground since Cameron came back with his plan. And is now in the lead by about 4%. So, and they're certainly playing the fear card, very much, very reminiscent of what happened during the Scottish referendum, where the fear card was used extensively, and also demonstrating the fact that the media is very dominated by the Remain campaign. So there'll be a campaign of fear now.
Sure. I mean, as you rightly pointed out, that was quite similar when we were talking about the Scotland independence referendum. Possibly this is just a tool politicians use to gain support or momentum for their campaigns, kind of fear playing on people's insecurities.
Well, it's fear of the unknown, which is reasonable, given that people in Europe, I've forgotten the guy's name, said, well, maybe maybe the point at which they check the passports might move to the UK. Maybe they won't do it in Calais, and that means that we would have the migrant camps, etc., would be in Kent. That's something to think about. But they don't see why they should have the hassle of keeping all this in Calais.
So that's very interesting. All these different dimensions and elements to the in and out debate, which is intricately tied, of course, to what's happening with the economic uncertainty, the financial thing. The basic premise of this article is that people feel that there is a sentiment going on that markets are losing faith in banks, which is propagated by also by the declining oil prices, but also by
the idea that it's a meteorological metaphor. The storm. The storm starts with lots of different things, and then you have the perfect storm where everything just happens to combine for 24 hours. That's the worry, and that's what this bank is saying, that we're getting more and more volatility. The waves are getting bigger, if you like. We may not make it.
Sure. Okay. Thank you very much.